Oil prices hit a 4-year low this month. It was tough for crude prices. Let's check in with longtime energy bull Eric Nuttall of Ninepoint Partners. Eric, always great to talk to you. Thanks very much indeed. That's quite the fire you have going back there. Is that virtual or real?
Try to make it festive for you.
Oh, I love it. Is it real or is it virtual?
No, that's virtual.
Oh, beautiful. Tell us, a rough year for oil. What do you think weighed on the crude price this year?
Yeah, we were cautious on oil since about March of last year when OPEC made a pivot to decide to add on incremental barrels. It was very non-consensus at the time. Most people thought, given some of the uncertainties around the global economy, the U.S. economy with tariffs and such, that they would continue to keep those barrels at bay. That changed. And so the market has been grappling with how will it absorb it. The headline was about 2.2 plus a small baseline change for the UE. So headline was 2.5 million barrels per day being added onto the market from April to September. We now, with the passage of time, know that a lot of those barrels were fictitious. They were already in the market. So net adds are about 800,000 to 900,000 barrels per day from OPEC. We've got several 100,000 from Guyana, more from Brazil. And so short term, I do admit that the market is temporarily oversupplied. We've got inventories building both on the water and, more importantly, onshore, more than they typically would. But I think, importantly, we really should think about 2026, I think, is going to be a very, very good year for oil. Not the beginning. We do have headwinds. The market's got to absorb these incremental barrels. But a few of the dynamics that you and I have talked about for many times in the past are really going to come to force next year. We've got demand growing more than people would have thought. We've had this year the IEA saying, well, rather than peaking by 2030, demand's going to actually grow till 2050. The twilight of U.S. shale is real. U.S. shale production has barely grown this year. It's been flat for the past 3 months. We see no growth from U.S. shale. As a reminder to the viewers, U.S. shale has been over 100% of total non-OPEC supply growth for the past 10 years. And as U.S. shale matures, 2026 is forecasted to be the last year of aggregate supply growth from both OPEC and non-OPEC. And so we see a structural mismatch beginning at some time in 2026. The world is going to wake up and realize we need exploration, we need offshore drilling, et cetera. And that does not work at 50s. It doesn't work in the 60s. And I don't even think it works in the 70s.
Eric, you and I have talked about Cenovus's takeover of Meg Energy. I think your thesis was the price could have been better.
It could have been.
But it was perhaps inevitable. Meg was in play.
Yeah, here you had the best quality asset in Canada, a spectrum of the market that remains out of favor. The small and mid-cap space, it remains very, very still out of favor. And so it was inevitable that a company was going to come along. We thought they sold prematurely. It was outside of the influence or power of the board. But we think it's in good hands. We think Cenovus is going to have a really good year in 2026. As they harvest the synergies of that asset, they continue to grow production. They've got a lot of their downstream issues behind them, and it trades at a material discount both to its Canadian peers and its U.S. peers. And what we see is U.S. money finally coming into Canada. We see that as investors are being aware that there's an inventory challenge for most of the U.S. shale companies, and we're starting to see a bid in the CNQs, the Suncors, and we think Cenovus can potentially catch up to a name like a Suncor trading at about a 1.5 discount.
You must be encouraged to see progress at last on getting Canadian LNG onto the world market.
Absolutely. It's took far too long, but here we are now. We think next year Shell will sanction phase 2. So Canada, we're exporting roughly 1 BCF a day. That's going to ramp to almost 2 BCF a day in 2026. We think that is going to narrow the discount that we're selling our gas for to about $1.10 a USD. That's a very, very healthy level. We are also bullish on natural gas in 2026 as both Canada and, more importantly, the United States build out LNG demand. U.S. will increase their export capacity by another 3.5 BCF a day. Exports to Mexico are increasing. And we also see strong increase in power generation. Areas like Texas, you have power demand up 5.5% year over year. And because of the lead cycle for nuclear, we think natural gas in 2025 has really gone from being a transition fuel to now a foundational fuel. So we're bullish on the headline natural gas price, and we're bullish Canadian natural gas as the discount should continue to narrow.
Eric, just looking at the performance of the Ninepoint Energy Fund in the year, well, let's say year to date, as of the end of November, up 24%. Not shabby on a rough year for oil. Down a bit in December, but not too bad. You've held in despite a very weak crude market.
I thank you for pointing that out, Andy. Yeah, we've had a good year. I'm happy with the year. Like, you've got oil down 18%. We unfortunately, our three top names this year get acquired. We had Vering get taken out by Whitecap in January. We had a very large position in MEG. We traded from 23 to call it 30 on the Cenovus takeout. And most recently, we had NuVista get acquired by Ovintiv, which we think will come to pass in early 2026. So that definitely helped. We also saw an underlying bid in energy in general. It does feel like the worst is behind us for the sell-off in crude. Again, we've got short-term headwinds, but it feels like investors are starting to look through, let's say, Q1 of 2026 to a lot of the more positive dynamics that I spoke about sometime in the second half of next year. And so if you truly, we're in a world where demand is going to continue to grow for decades to come. The world just lost the biggest source of incremental supply, and now we need offshore. I think if we do the show again next year, we did last year. I'm happy to be with you this year. 1 year from now, oil could be in the high 60s to 70s. And when you look at oil stocks and with a potential upside, this year was a good year. We remain bullish in the outlook for especially Canadian energy stocks for 2026. We think it's going to be another very good year.
Eric, thank you very much. And I know you have a bunch of little ones at home, and I hope they have a wonderful holiday and a wonderful Christmas. Thank you very much indeed.
Merry
Eric
Christmas.
Nuttall of Ninepoint Partners.